All right, so in this lesson, we're going to cover the basics of my strategy and see what indicators and how to start. So we have to go to tradingview.com right here. Go to TradingView, you can make an account and everything. So we have to open the graph. So for my strategy, we want to analyze the euro dollar. That's the main pair you want to focus on right here, euro dollar. There you go. So the first thing you have to know is that for my strategy, we're going to use the 15-minute chart. This is the main chart we have to focus on, the main important one. That's just for my strategy. For other strategies, sometimes you have to use 1 hour, 4 hours, but I don't care. For my strategy, 15 minutes. Because we want to book profits very quick. So, 1 second. Right. So the first thing you have to do is add some indicators. So you go to indicators, you go to moving average. Sorry, my computer is in Italian, but you have to look for moving average. There you go, moving average, and also moving average exponential here. So at the end, your chart is going to look like this. See? So we go back to our chart where I teach you how to set up everything. So you see here, you have your two indicators, moving average and moving average exponential. You have to go to settings right here, select moving average, settings, color of the moving average is going to be, let's do it like mine, moving average, color has to be red, okay. So the color, you put red, and here for the period, you put 50, sorry, 50. Okay. For the exponential, the color, let's put green, and for the period, you put 14. Okay. There you go. Close, and now you see you have your two moving averages. And you can see that when the green line is above the red line, we are on a bullish momentum. And when the green line is below the red line, we are on a bearish momentum. There you go, okay. So also, always remember to check the news for the day when you want to trade so that you can check if there is any big news. Because if there are really big news like non-farm payrolls or things like that, you don't want to trade that day. One other thing you have to use is the currency strength meter. So you just go to this website, you can just click search for currency strength meter, and you're going to find this one. And you can just see that if we are trading the euro dollar, the euro is stronger than the dollar today. And we can see this because we are on a bullish momentum. So the euro is stronger than the dollar today. Very good. So another thing we have to modify is our Fibonacci retracement. So you just draw them. You go to settings. You're going to have them differently when you draw them the first time. But you have to go to settings. So what I did is I don't use any higher retracement than 1. So you don't use this. You don't use them. So you do this, right? Very good. For the color, you use black, only black. Right here, you're going to have the 0.50, but you delete it and use 75. Right here, you're going to have another level, but you're going to modify to the 62. And right here, you put 79. Very good. So now you extend lines here. You go down, and from the back, for the background, you put it like this. You want to have it clear, so it doesn't get messy. And you do OK. So it's going to look like this when you draw your Fibonacci retracement. Look. Very good. You have the 62, 70.5, and 79. These are the three main levels that we want to use. Okay. Another indicator that you have to add, here you can see, is this one on the background. You see the pink and blue background? Because this one tells you when the Tokyo session opens, right here, opens. Now, right here, the London session opens. Right here, the Tokyo session closes, and then it just continues. And we want to use this because we know that from here to the end of the blue is one trading day. So this from here to here was one trading day. Here another trading day starts, and about right here is going to end later. So you have to add this, and the name of this indicator is CM Forex Session Highlight V1. So just look for this one, and if you want to see, you open the settings, and you just use these that I use. So the New York open, New York close, Asia session on, Asia close on, Euro session on, Euro close on. And if you want to see the colors that I use, these are the colors. Wait, sorry. Okay, these are the colors. All right. Very good. And your chart is going to look like this. So now I show you my strategy, how it works. We go to my main chart. This is how it's going to look for you. So my strategy is it uses Fibonacci retracement. And when we draw Fibonacci retracements, we draw them from the actual body of the candlestick, not from the wick, but from the body. So in this case, today, we run the Fibonacci levels from here to the top. Right here, you see the top. Good. This is the trade that I took today. Okay. Wait a second. Okay. Very good. So we drew them from here because it's the actual body of the candlestick and not the wick, but just the body from the top. And here too, the body, not the wick of the candlestick, but the body. And the reason why I draw my Fibonacci levels from here and not the actual lowest point, this is the lowest point, but I decided to draw them from here, is because this is a leg. Sorry, this is a leg, and it is the leg that broke previous market structure. It means that it broke this high right here and this high right here. It broke them, sorry. So you want to start running your Fibonacci levels from the point, from the leg that breaks market structure. So here, if you don't know what a leg is, you can just look at my videos or just look it in the internet, or I recommend the site babypeeps.com, which explains very well everything. Sorry. All the basics, it explains everything. So you go to babypeeps.com, this one, babypeeps. Here, and they explain everything. You go to education and you learn Forex. So this is the most important thing that you have to understand, that we run our fibs from the leg that breaks market structure and not always from the lowest point. Sometimes it might happen that the leg that breaks market structure is also the lowest point, but it's not always like that. So you have to check. So here we don't have anything. Now it starts going up, but it stops. Starts going up, but it doesn't break any previous high, and then it stops. Then it goes up, and it actually goes up a lot. And when it goes up a lot, this is when we have to start considering to run our Fibonacci levels. And other than going up a lot, it also broke this previous high. Then pay attention right now. It started to go back down, and we want to see a bounce from one of our levels to buy and make profits going up. So it started to go down, and I entered. You want to enter your trade, your first trade, at the 62 level. So if, let's say, you have a $1,000 in your account, so you can open, if you follow my instruction, you can open one lot total. So you want to open 3 trades of about a 0.3 lot each. So if you open 3 trades of a 0.3 lot each, the first trade, you're going to open it at the 62 level, because sometimes it just touches the 62 and goes back up. Your second trade, you open it at the 70.5 level right here. And the third trade, you open it at the 79 level. After opening these 3 trades, you see that the candlestick touches the 79 level, and then it starts going back up. And if you follow my instructions, always remember to set your stop loss at 10 pips and your take profit at 10 pips. So you're always going to have small profits of 10 pips, but they're going to add up. And if you use good lot sizes, so for example, if you use one lot, 10 pips are $100, and in one day you just made $100. So you want to take profits at 10 pips. So for example, here it touched the 79 levels at 15.50. 1558 right here. So at 1568 right here, we want to take profits and get out. What I recommend to do is that if you have 3 trades running, you close 2 out of the 3 trades at plus 10 pips. And for the third trade that you just let it run. So you close 2 trades at plus 10 pips, and for the third one, you put the stop loss at the entry level, so you have no risk of losing money. You want to trade with no risk on the third trade. You put stop loss at entry level, and you just let it run. So this is what I did today. I got profits at plus 10 pips, let the third trade run, and it went up a lot. And I actually closed everything right here. But from here, from the 79 touch, from here to here where I got out of my trade, these are 30 pips. And this is very good. I was really happy with it. But I usually just book profits at plus 10 pips and let one trade run, and then see what happens and decide when to close everything, maybe at plus 15 or 20 pips. It just depends. But so this is what you have to do. And if I recommend to use the euro-dollar pair and just open one trade per day, because you have to understand how this pair works. And it is really important that you practice only the euro-dollar. You can also use this strategy with other pairs, but I mainly use it with the euro-dollar. And if you check, you're going to see this pattern every day. So you can use this strategy every single day. In a bullish momentum or also bearish momentum, you can use it. And you can actually find many opportunities to enter trades. But if you follow my instructions, for now, just do one per day. So I delete this. Now, let's see what is happening with the price right now. I run my Fibonacci from here to the top. Wait a second. Okay, to the top. I see that there was a touch right here, 79 level. So this could be another opportunity to enter. I didn't trade this one because this just happened right now while I was recording the video for you. But if I was trading right now, I would have entered a trade at the 62 level, one trade at the 70 level, and one trade at the 79 level. And obviously, I would have both. So I would have went long on this one because it was a bullish momentum. I wait for the retracement at these 3 levels, and then I expect it to go back up. So let's see if this is going to happen. I didn't trade this one because, as I told you, I just do one trade per day, get a lot of profits on that one, and then I'm out. I don't risk it with 2 or 3 or 4 trades per day. I just want to get my secure profits from one trade because I'm sure about my strategy, and then get out. But from here, my strategy is working with this one too. I mean, it almost always works. The accuracy is 90%. So almost always it works. So it touched the 79 level from here, and you see the price was 1.1585, and now it's going up. Let's see what's going to happen. So let's see if I can find another example. So, for example, Fibonacci levels from here to there. Oh, sorry. From the lowest point in this case, because this is just all messy right here. Mess. I don't want to trade any of this. And then I see a spike. Then let's say I saw the spike and I put my Fibonacci from here to there, sorry, waiting for a retracement. But it didn't happen and it kept going up. So I moved the Fibonacci levels to the top, waited, went back down, kept going down, enter my first trade at the 62 level, you see 62, entered here, then I had to wait again, 1 second, yes, went back down, entered my second trade at the 70 level, and the third trade at the 79, then it just went back up, went back, actually touched again the 79 level, and then went back up again by a lot. And I get my 10 pips, get my profit, and just get out. So this is how my strategy works. You can find the pattern every day. Every day you find the 62 or the 70 or the 79 bounce, and every day, almost every day, you're going to find an opportunity to trade with this strategy. It is really important that you practice and that you understand how to use it. Remember to always put your stop loss at 10 pips and take profit at 10 pips. And if you want, you let one trade run to see if you can get more profits. But for the third trade, if you let it run, put stop loss at the entry level. So you have no risk of losing money and you get your profits every day. As I said, every day you're going to find these patterns and you're going to find opportunities to trade with this strategy. But sometimes there are big news about the euro or the dollar, and on those days I recommend not to trade because it is risky. And that's it. Now I was checking this, and the bounce actually happened. So we're going to see if it goes up again, and if it does, we're fine. Very good. So this is pretty much almost everything, and I already explained to you how my strategy works. There's not a lot more. So I recommend just to practice it and use my same indicators. Use the Fibonacci levels, the same method that I use them. So use the same levels, the 62, 70, and 5, and 79, because these are the points from where the price is going to bounce. Thank you, and just study these Fibonacci levels. And next lessons are going to come, but there are just going to be more examples and some more things, but not a lot, because I explained almost everything.